Good morning, everyone. Dr. Sudhir Mukund Galande has been a career banker and an administrator all through his service spanning for over 35 years now. He is highly qualified both academically as well as professionally. His academic qualifications are MCom, MA Economics, MFM from JBIMS, PhD from University of Mumbai, and he also has a LLM degree in field of law. His doctoral research was in the area of corporate governance, and title is Corporate Governance in Indian Commercial Banks. Dr. Galande is a fellow member of FCMA of the Institute of Cost Accountants of India. He also has completed a fellowship from Company Secretary Institute, that is Institute of Company Secretaries of India, ICSI. He has cleared the professional examination of CAIIB from the erstwhile Indian Institute of Bankers, which is now renamed as the Indian Institute of Banking and Finance. So, 4 master's degrees from reputed universities or institutions and 4 professional qualifications, enviable academic and professional background, so to say. The roles that he had played includes serving as the Chief Executive Officer of ICWI, Calcutta for 4 years, Deputy CEO of Indian Institute of Banking and Finance, Mumbai for 5 years. Prior to holding these leadership positions, he had a rich and a diverse experience in India's commercial banking for over 30 years, both at operational as well as at the policy-making levels. Some of the broad areas of his banking career include industrial advances, BIFR, DRT, SURFACE Act, legal department, regulatory functions, risk management, accounts, investments, general administration, HR, information technology. He was associated in the implementing of the core banking, finalization of accounts after deliberations with the statutory auditor, development, priority advances, NPA management, audit, training, board departments, and other functions. Dr. Galande is closely known to me for the past 17 years at Somaya Institute of Management Studies. And you all would be surprised to note that he knows this campus for over 45 years now, since late 70s. So I think probably none of us would have been here, even as a student. Dr. Galande is a knowledgeable, pleasant, committed, soft-spoken, accommodative, straightforward, and above all, honest and inspiring person for almost all colleagues he had worked with. I thank the organizing team of Somaya Vidya Vihar University for this wonderful initiative to conduct the lecture series in the field of Nobel. And I am sure that all of us who have gathered today would learn a lot of insights and the purpose why this Nobel was awarded to the 3 members in year 2022 for the economic sciences. Now, I am personally grateful to Dr. Galande for accepting our invitation and to come all the way from Pune for this purpose. Thank you and welcome to you, sir.
Thank you, Dr. Shivkumar. Requesting Dr. Galande to deliver the speech. Thank you. So we have the collar mic as well if you want. We have the collar mic as well if you want.
No, don't shuffle this.
Good morning to all of you. I think, first of all, thank you for my teacher, Mr. S.N.V. Kumar. He was my guide for the PhD. I did it when it was a Mumbai University at that time. Okay? But other things were there, and all respected teachers, professors, all the eminent dignitaries, and my student friends. I am very delighted here. As Sir has said, I know. I was staying in Chembur in 1976. From that, I know this college. It was there first landed. I am not born and brought up in this city, but I came to Mumbai in 1976. And then after the bankers, we do have different cities together. Okay, so it is there only. Most of the things I had been in Mumbai or other also. But PhD I did it here under the Sir, Professor Dr. S.N.U. Shiva Kumar. Madam was also there, although she was not there in the employment at that time. But she used to guide because she is also very knowledgeable. So we need a guide actually. So let us have this topic. I think to me the allotted time is 1 hour and I will finish. Although I am a banker for 30 years, I started my career with teaching. After that banking and then back to teaching for last 10 years. And my concern is always whatever is time allotted, within that I will do it. I don't want extra time. Only little bit we have started late. That's only the things is there. Okay friends, topic is very simple. Research on banks and financial crisis. Basically, it's the question of a regulator. What this 3 eminent economists is there. Professor Bernanke, then this actually Douglas Diamond and this Phil Dybvig. Both are basically academician, Douglas Diamond and Dybvig actually, but he was a practitioner. Ben Bernanke was there. We will just see. He was there as a governor of Federal Reserve Bank from 2006 to 2014. Okay, this is basically, I will just have the introduction. What is it before this? In any sector, you need a regulator. If there is no regulator, then it can be a chaos. Just think of our education sector. We are having the regulator known as UGC, University Grants Commission. It started in 56 as grant giving agency, but subsequently you have got lot of things. Quality, standards, student teacher ratio and all that, and various institutions under it, AITC, NAC and all that. And some of the institutes did get associated, like Medical Council for starting the medical college, our Bar Council for starting your law college, like that. Otherwise what happened? Where are the maximum jobs in IT? Bangalore. So instead of 600 intake in that college in Bangalore, I can have 6,000, I can have 60,000. But no, it is not allowed. Someone is watching, someone is there. And something has happened, you know, in around 2010, when private universities were allowed in this country, the city like Raipur, in a 10 by 10 room, there were more than 100 universities registered there. Supreme Court intervened at that time. So lots of the things is there. Only one thing in case of UGC, what I am keeping last 4 decades or so, I am not able to understand, is the fake university. That is always there on front page. Some 3 decades or 4 decades ago, it was a single digit number. Today, it has become a 2-digit number. Around 24 are the fake universities. And last 2 decades, I'm always hearing or listening that the UGC doesn't have the teeth to take the action. I'm wonderful. In the banking sector, what we are having regulator here is the Reserve Bank of India. If there are fake financial institutions, what will happen in this country? And if the Reserve Bank says it has got no powers for all, to me it's beyond vision. Perhaps the mushrooming will be all sorts of Lena Bank, only taking the money, and there will be no Dena Bank at all. And whatever was a good Dena Bank, it got amalgamated with Bank of Baroda. So it is there only because of that I'm not able to understand that fake university status. Otherwise, simply we are coming to back to this one. The financial crisis, banking crisis, and then the role of regulators. These are nothing. This research is a 4-decade research. It was in early 80s. Ben Bernanke concentrated on the role of regulator, that is the Federal Reserve Bank there. We are having this, what we can say, the Reserve Bank of India, we started in 1935. If we just take the history, one of the oldest bank is Bank of England. It was 1694, but it is not the oldest. 1668 is a Sweden bank. I don't know. But the Scandinavian countries, whether it is a science or a social science, they are always ahead. and no publicity, nothing sort of that. So we just normally take England, 1694 or the Bank of England, and other two gentlemen, the noted economists, basically Douglas Diamond and this DBBs, regarding that role of regulator, how the rumors play the role in run on the bank. That is what is there. We'll just first see about this Bernanke actually, who was basically first of all we will start, and I'm keeping a watch on the watch, so you don't worry, 1 hour means for me it's sufficient.
Dr. Galande, small request. You may have to wind up by 11:25.
Okay, we will wind up like that, 11th. Okay, fine. So no issue for that. We can wind up like that. See, 1907, I am taking the case of USA because their case study was based on the USA. What happened? Lots of banks in New York City start failing. There was some sort of a issue of a confidence. And at that time, JB Morgan was the bank which came to the rescue of many banks at that time. And then it helped them, and somewhat the banks were saved. I am talking of 1907. At that time, there was no central bank in the USA. For the first time, the government there realized there is a weakness in the financial system. So they decided to start a central bank, which was named as Federal Reserve Bank in December 1913. And it started functioning from 1914. That was the first things. But the drawback of that Federal Reserve Bank was that the membership of Federal Reserve Bank was not compulsory for the commercial banks. So then what happened around what is that Great Depression, when Bernanke studies is based on Great Depression, how the Federal Reserve Bank has not played the active role in somewhat getting some of the banks burst or bankrupt. We will see that number and everything. Okay. So what happened was that at that time, the 3 products which were in demand during those days were the automobile, radio, and refrigerators. And normally the stock kept is 40%, but during that time the stock kept was around 300%, all these 3 products. Plus people were taking the money from the bank and investing in stock market, nothing like that, 1929 onwards. And then all of a sudden, Federal Reserve Bank raised the bank rate and your stock market crash. The moment stock market crash, the depositors flocked to the banks and they demanded their money. Why they demanded their money? Because they are scared that this bank may not pay the money. And was they really needing it? The question is yes and no. They just want to take the money and keep at home under the carpet. Or someone who has suffered the losses in the stock market, he will be able to meet that. That was the object. But the banks were not prepared. Banks were not keeping any cash with them to honor such commitment. There was no such experience for the bank, but it was too late. So what happened? Some of the banks failed, and the number there was very big. The number I will tell, in 1 year itself, 1932, 4,000 banks failed in the USA. Nothing short of that. Today we are very surprised, but those days that was the rule. You can't do it. And what to do? Then during that time, 1933 was the period. Basically, the newly elected president, Franklin Roosevelt, was first time elected, and he is, the most celebrated president in the sense, the president who occupied the office 4 times. After that, the rule was changed. Nobody can be in office for more than 2 terms. So he brought that Emergency Act, that is known as Glass-Steagall Act actually, where he brought some of the 4 features. Some of the features were, first of all, the membership of Federal Reserve Bank is compulsory. Secondly, he introduced insurance for the depositors. That was the first time Federal Reserve insurance was given for the insurance. Okay, for the depositors, insurance was given. Third was reserve requirement. cash reserve requirement in the sense bank has to keep certain money. For example, if the deposit is rupees 100, they have to keep some money, 2 rupees, 3 rupees, 5 rupees with the Federal Reserve Bank to strengthen it, the financial system of the country. And the fourth was that commercial banks were prohibited to give the loans for investment in the stock market. These were the things they decided. After some time, people realized that banks has remained strong, whatever has remained, so they start depositing the money, whatever it was kept at the home, it is of no use. So again but it took a lot more years to restore that confidence, because once you are down in any condition, whether you can say individual case or institution case or country, whenever you suffer like that, recovery always take by thumb rule, at least twice, thrice what you have suffered. So it was this, that was basically the research actually of Bernanke, who was basically in 2002, he was not occupying any position, but he, in a public speech when he was delivering, he apologized to the depositors of that time. The Federal Reserve Bank has failed in the sense it has not helped. Some of the solvent banks also become bankrupt because they were not helped. Because in a clearing system, you are not honoring the checks. So what to do? And then there is a run. Run on one bank will be run on another. That contagion effect given by the other two bankers will also tell you within the time limit Indian bank experience also. So this was then, and for the first time when this, basically during 2007 to 9, when there was again a bank crisis in Europe and particularly USA, he was at the helm of the affair. He was the governor of the Federal Reserve Bank, Mr. Bernanke. There he walked the talk. There he tried it actually. When there was because of, you have read a lot more, what is that housing bubble, I am not going to that. In the housing bubbles means nothing else, but the basic behind housing bubble was that Congress passed a resolution 2 decades back that there should be affordable housing to needy people. It is a basic reason for that. And then they started rating lays and all that. Any Tom, Dick and Harry getting housing loan, not able to get it, securitize, sell the securities, everything. I don't want to go into that. But it created a problem for the banks because these banks are integrated. They do purchase the securities, hedge funds and all those. We are not going, because that is outside the scope of today. And then the first thing why I mentioned, Bank of England was the first to rescue. There was a basically run on Royal Bank of Scotland. And the government immediately, Bank of England provided the funds, and within some few days it nationalized that bank just to stop the run on other banks. Similarly, more than $700 billion but was provided basically the relief by the Federal Reserve Bank through the government. Many banks got, including Citibank, mailing. Only Lehman Brothers collapsed, unfortunately. But other banks had got it. And the policy, what he researched, Mr. Bernanke, he tried it. Make the bank rate to 0. Quantitative easing means printing more money so that liquidity into the system is restored. But he has to face a lot of problem from his Congress. Okay, when he was tested there, what one of them say, you are putting the seniors under the bus. Because what under the bus means what happened? Because rate of interest is 0, bank rate means your deposit rate will fall down like anything. Another Republican basically candidate was there who was running the president elections. He said once he elected, he will try Mr. Bernanke for the treason because he is playing the politics by having the cheap money policy. At that time, Mr. Subara was there actually, the RBI Governor. He was a good friend of this Bernanke. He was very surprised the way Federal Reserve Bank Governor is treated. He asked him whenever he met him, what Mr. Bernanke told him, it is nothing but occupational hazard. Okay. Similar example I will tell after demonetization, our Mr. Urjit Patel was the RBI Governor. Our Parliament Committee also heckled him. But one of the members of that Parliament Committee was Mr. Manmohan Singh, ex-RBI Governor, Finance Minister and Prime Minister of India. He told, You cannot treat RBI governor like this. You can ask him the questions. And he also told Mr. Urjit Patel, you have to maintain the dignity of the office. Something you know under the Secrecy Act, you should not disclose it. And that's what a good gesture by then actually. Otherwise, in USA, you cannot think of this. This is what he has literally talks other to what they are saying, because basically there can be run on the banks. Anything has happened, 29, the way the banks felt, even in only thing because 2007-8, since they have supported like anything. The government has supported, otherwise many banks has burst, 4 banks has burst in Iceland also. And lot of, because these are integrated economy. So it is being felt everywhere there. Indian Express, I will tell you, I have to keep watch also, but sufficient 20 minutes time is there. I will tell you the Indian Express of this. How the run on the bank goes. 2 stories I will tell you. One is a story of 1967. Of a Punjab National Bank. It was not nationalized, it was a private bank. It got nationalized in 69 only. Okay? In the city of Varda, my father used to tell me, who was a school principal, so it is from a third party. I was barely a child, maybe 10 years old, something of that time. He told me, and then after I became the banker, he told me this story several times. What happened in 67? One of the customer, Bachawat, was there, which are having in cotton ginning and pressing. In that area, it is all that cotton, and then ginning pressing is the activity. And during the season, they needs lot of money. Somebody was not having a good relation with manager. I am also very surprised, because those days, most of the managers were private banks, and they have learned the art of, Japanese art of greeting the customers, means bowing or bending, simply nothing else. That is what the customer used to do, but before the good client, because it was a class banking. It was not the mass banking. You can, today, the way you walk to the manager cabin, nothing sort of that. You cannot cross anything. Manager, in State Bank, they used to call it as agent. But other bank, you can't walk it there also. Maximum you can go, if you are not a class person, up to the head clerk of the bank. Even the officer was not possible prior to nationalized in 69. So he has got something of this sort, and he needed 2 lakhs rupees during for cotton season. And today it may be around whatever that 5,000 inflation today is there, that 67. It can be, you can say 1 crore rupees he won in today's value. And if you just see here, perhaps today bank take us for granted, but in here also you will see in the Mumbai city or some of the suburb, you will see it is written, if you want a cash of rupees 5 lakhs or more, or 10 lakhs, whatever the amount is there, depending on the bank, you have to intimate 2 or 3 days prior. You cannot just walk in and I want 25 lakhs cash. It doesn't happen. Some of the branches it will happen. I'm not saying. But otherwise it is noticed there, but most of the banks has today forgotten, because we are not going to create anything. And since so long as any bank is having Government of India board, it doesn't bother, they don't put it. Those days were not there. It was not a nationalized bank. And he says, okay, 2 lakh, that 2 lakhs cash is not there since he has not intimated. He said, by 4 o'clock I will arrange, because 70 kilometers is Nagpur where Reserve Bank and his regional office of Punjab National Bank was there. He said, attend. But what happened, I don't know. Within the 2 hours, there was a rumor in the city that PNB has burst, is not able to honor the payment. And long queue was there. Almost some 1,000 people or whatever that was gathered or flock at the bank. They want their money back. Manager was also surprised what to do. But he kept it open. And that day, he kept that branch open up to 2 o'clock in the morning. At 2 o'clock in the morning, with a folded hand, he says, my entire staff is now tired. Tomorrow we will open at usual hour, and till you want to withdraw the money, the branch will remain open. And during that day also, after every hour, he used to come outside with a hand mouth or anything. He was announcing the bank is very sound, we will honor your payment, nothing has happened. But the people, whenever there is run on the bank, private bank, it is very difficult. And second day also, it was open up to 11 o'clock. And only on third day, then people start depositing their money back. So this is what is there when you are. My father has told this story several times. When he learned that I had joined the bank, he was very happy. So in a private bank it is there. Government of India board is doesn't bother. When I was working in a private bank in 2004, similar situation happened in Bhinder. What happened, I don't know. It was morning, evening branch, 11 o'clock, sudden there was a thing, this bank has brought a trouble, and all sorts of 100, 200 depositor gathers. We made one very good things. No one, I was working in regional office, no one will from regional office will go there. So it will be a panic button. Only nearby branches, we are having branches at Vasai, Virar, Dahisar, Borivali, they will supply the cash, but no will then. Chairman met the Reserve Bank and they apprised him. That is what there. Only thing, good thing happened was that there was nothing in the paper. Journalists cooperate, whatever the local was there. That day it was open at 11 o'clock. Next day it was open up to 9 o'clock in the evening. It started at 8:30 in the morning. And with no lunch time, whatever, 15, 20 minutes. But continuous withdrawal and we honor it. And within 2 days it subsided. So that was the research by the other two Nobel laureates. How you can have this actually. Sometimes it is very difficult to predict anything, whatever. If it is a private bank. A government bank, it doesn't have, people doesn't have anything. So run on the bank is there, and that's what they say. Professor Douglas Diamond, they say that the role of the regulator is important in this. You have to help. You have to gain something. I think around 2003, there was something regarding ICICI Bank in Surat. But Reserve Bank itself, the Deputy Governor announced there is nothing like that. So within 1 day, it subsided. Now, today the banks all have become big. But still, those who are not the government banks, for them has to be cautious. Sometimes our Indian experience is that regulators also doesn't get the idea how the banks functions. Because sometimes what happened, one of this biggest things is I think that Cooperative Bank collapse in Ahmedabad. Mogvira was there actually. And it was there in 2000. And during that urban cooperative bank, so many urban cooperative banks, there was a run. And then Reserve Bank did actually basically ask many banks to amalgamate. Of course, some of the banks I have seen, I was working in Ahmedabad at that time. One bank I know, Charottar Nagrik Sahakari Bank in Anand, a very good bank, some 3-4 branches, 500 crore deposits. It's simply fallen for the rumors from the rival group. It's not something from rival group wants just that bank should not compete with us, and it gone. So that is what they say, run on the bank because you can't contagion effect, what they say, because rumors can be there, anything. And that 2000 was the worst period for the urban cooperative bank. As far as India is concerned, till 34, Reserve Bank started functioning from 1st April 1935. Till that 300 bank collapse. Even after that 600 banks collapse up to 49. Because see, between 40 to 50, many banks collapse in Punjab and Bengal. Because of that partition means somewhat there are rumors how much will remain with India, how much will go with Pakistan, like that. So bank has fallen and the Reserve Bank could not do anything. What they say, they are not having any powers to regulate. There are no supervisory power. Sometimes what happens, our acts are not that, we learn only by experience. So the Banking Regulation Act was amended in 1949 to give the powers to Reserve Bank to supervise the thing. Otherwise there was no supervisory powers to the Reserve Bank of India. Sometimes we learn by experience on things. And the last 2 banks failed. Well, Palai Central Bank from Kerala and another bank was Lakshmi Bank from the Akola. There were the last 2 banks in early 60s that failed, where the depositor has lost the money. After that, no depositors has lost the money, especially in scheduled bank. Urban cooperative bank, I am not talking. Okay? And then the government introduced from 1st January 1962, that is Deposit Insurance Guarantee Corporation. So it was the insurance for deposit from 62. I think last 2 years back, we have enhanced that limit from 1 lakh to 5 lakhs. So in any bank, your deposits up to 5 lakh is secured. So that is what it is there. It started in 1962. Otherwise, there was not actually. After that, I have not seen after 62 anyone losing the money from scheduled bank. More than 30 banks are amalgamated. Some of the classic examples are there where Reserve Bank also were. For example, the New Generation Bank was a global trust bank. 1994, it got first license. And unfortunately, whatever the brokers enter it or whatever is there. 2004, it was amalgamated with Oriental Bank of Commerce. And of course, in 2018, Oriental Bank also lost the way. It got amalgamated with PNB. Okay. But one of the example I surprised was the Nedugundi Bank, 1899 bank. It was a very good bank, in Kerala-based bank actually. They were the bankers to the Canara Bank once upon a time, because Canara Bank started in 1906. But somehow after 100 years, around 2000, brokers again entered that bank, and Reserve Bank could not do anything. They did tried it, but very unfortunately, and then the parliamentary committee was set up and they hammered the Reserve Bank like anything. It has failed in everything. There was a total apathy on the part of Reserve Bank of India. Sometimes what happened, the governors are also bureaucrats. They know how to tackle it. So what he did, with the permission of the board, he engaged the services of former Chief Justice of India. The present Chief Justice is Mr. Dhananjay Chandrachud. His father, Yashwant Vishnu Chandrachud, they engaged the services of him. This Yashwant Vishnu Chandrachud was having the longest tenure as a Chief Justice of India, 8 years and 3 months. Nobody is near to that. Only earlier were 4 years something. Otherwise, some are in 3 years and some are in days. Mr. Lalit was having before this Mr. Dhananjay Chandrachud 74 days. Otherwise, the record is for 40 days also. So he engaged, and then what happened? He saw it everything and he gave a clean sheet to Reserve Bank of India. He said nothing is wrong with them. The bank has not taken the steps what the Reserve Bank has said, and there is no total apathy. But there is no apathy at all on the part of Reserve Bank of India. What we say in cricket, na? With an unplayable delivery, the batsman is clean bowled. Parliamentary committee could not do anything. The matter was closed. Sometimes what happened, you don't have, see, Reserve Bank, I will tell you one more story of a bank of Rajasthan. It is 1943 bank, and then I will come to that. They removed the chairman because Reserve Bank has got only power to remove the top person. You call it chairman, you call it managing director, you call it CEO, whatever the name. The person who is in whole time employment of the bank and who headed the bank, they only can remove it. They can appoint additional director. Beyond that, they have no power to supersede the board. Those powers has come to supersede the board in December 2012 when the Banking Act was amended. But these are the stories in early 200, 203, 204 like that. So they could not do. In case of Bank Rajasthan, there was a tussle between the two industrialists, Mr. Bangur and Mr. Payal, and lots of funds were diverted or whatever you can say. Reserve Bank, sometimes regulator failed. They were not able to detect it. They appointed two international accounting firms, Deloitte and KPMG, to know what exactly has happened. But this for forensic audit. But both of them, international accounting firm, were not able to trace the tricks done by ingenious Indian accountant. They were not able to do. I don't know. But what then happened in 2010, Reserve Bank simply amalgamated Bank of Rajasthan with ICICI Bank. But the things I like that most of this Professor Joseph Stiglitz, Mr. Paul Krugman, both are the Nobel laureates, they say USA experience is extremely bad. You should not allow any industrialist to start or give license, banking license to industries. What is there? At least in our country, around 2000, there was a lot, 2005, there was a lot of debate to give the banking license to industries. So far, we are not given. That is what I always remember this. Regulators sometimes cannot do anything else. So these are the things, students, anything is there, let me within the teams, because I was supposed to, I will, whatever the new time limit is there, we will try to stick it to that. But I will just, 2-3 things for your information, I will just read it out, how this 2007-8, we will wind up within 5 minutes, don't worry. How this 2007-8, how the things are there, how the USA finders are there, field analysts were there. It is also called second Pecora Commission because the first the Pecora Commission was set up during Great Depression. So this is called new Pecora Commission. How their findings are there? The findings are very good. Widespread failure including Federal Reserve Bank. So they simply charge their Federal Reserve Bank, it has failed. Secondly, financial firms acting recklessly and taking on too much risk. Third, an explosive mix of excessive borrowings and risk by household and Wall Street. Fourth, key policymakers ill prepared for the crisis, lacking full understanding of the financial system they oversaw. And the last, system breaches in accountability and ethics at all levels. So these people, American people, are like your soccer commentators. How are the soccer commentators? They left and right criticize the referees. You know, 1986, the soccer is going on. Maradona's handball, which kick out England out of the semi-finals. And commentator were saying referees, wrong, it is handball, referee doesn't bother. And what about our cricket commentators during those days? Something has even not touched the bat of Sunil Gavaskar, he is given out. Something has touched Tendulkar, whether he is LBW, commentators say, don't know, but in both the cases, what is Indian commentators or cricket commentators comment? When the third view was not available, I think the umpires are in best position to judge whether it has touched the ball or whether it will hit the stump. But cricket, soccer commentators are not like this. So this is this findings by the American, of course, the findings of House of Commons of the Treasury Committee were there. Their two things were very strong. The auditor has failed, rating agency has failed, so there is no need of auditing or rating agency in this country. This was the House of Commons Treasury Committee. So they are also very strong actually, but they normally like a cricket commentator, they are having. Friends, in the end, I will only say, any influential study, research or work to get recognition, applause need not be complicated. Thank you very much. Any other things we can quickly fire out? Any question you are having? Whatever with the time availability, we are trying to cover it, try to give the justice.
I would like to know, Mr. Bernanke, before joining Federal Bank, before joining a federal bank as a governor, and he did a lot of research on 1930 crisis also. So he must be, some kind of foresight he must be having that this is coming, a crisis is coming in a US system or banking system. Something happened before 2008. So how he suggested the government or policymakers or somewhere this is crisis is coming. So what policy decision should be taken, because he has experience. No. A lot of experience. And the second question is just related to this only. When we learn from experience, this has happened in the US and happened in 1930 or maybe. So I have heard somewhere or watching a TV ki something happening in China and maybe housing bubbles is burst or something, or the banking system is not working properly. So how is going to affect at a global level this? I want to know.
Let's first of all go to Ben Bernanke. Basically, whenever it is called the second depression, whatever that 2006-8 was there, But there cannot be an identical situation. There can be similar. Okay. In fact, when these things were there, in 2007, when Bernanke, when was called by the Congress, he said everything is all right. Just mortgage is getting well spread. And what happened was actually reverse. So it is not sometimes you can predict that. But he, whatever was that, he reacted, made it the bank rate 0. But after that, what? So that quantitative easing, what you say, printing more money, means liquidity is to be increased into the market. And that's what he did it. And not even for emerging markets, he used to give during that 2 years period, after every 3 months, some statement used to be given by the Federal Reserve Bank for the emerging countries like India also. But whenever he make the statement, these people used to take it very somewhat wrongly interpret. So he also has admitted in his that biography, I don't know why the people, because India has suffered once, I think 2008 or something quantity easing he made it, and Subbarao has said that within 4 months, Indian rupee has fallen by 40% within 4 months. So something he didn't mean that, but sometimes whenever these people speak it, it is also wrongly interpreted. So it has to be, he said he never intended that. So that also. As far as China, I am doubtful. When the information is not there, with a selected information to draw any conclusion, yes, you and me are on the same page, yes, problems are there, but can't, because they never disclose it. So it's very difficult to, it is only estimation on the half information.
Oh, thank you.
Hello, sir. I would like to know how RBI regulates Punjab Maharashtra Cooperative Bank, and also I would like to know regarding Yes Bank, and also a lot of fintech companies are coming right now, so they provide instant loans. So how RBI deal with this?
See, first of all, your Punjab Maharashtra Cooperative, it's a cooperative bank. See what happened, cooperative bank is under a dual control. It's not solely under the control of Reserve Bank of India. So sometimes it is difficult. During 2000, Madhavpura Cooperative Bank, I say the biggest bank in Ahmedabad, went down. And so many banks were affected because of that. Wherever possible, they have done it. To pay, the Rupee Cooperative Bank is now more or less license is cancelled. It is a 1906 bank, well before the Reserve Bank came into being. But sometimes you are helpless. When especially most of the banks that has gone down, they have committed what is meant by the long-term blocking of the funds to the builders and estate agents. See, this other two gentlemen was having that, what is you call the matching, what we call that asset liability mismatch, market risk. We are having that ALCO system, 8 buckets and all that. Because of paucity of time, we cannot do it. So cooperative bank is very different. Yes Bank, what happened? Some of these new generation bank are very aggressive. See, the founder has come from the Citibank. Okay, so they are very aggressive. Sometimes when I can tell you not to be there within 4 walls, when the Yes Bank was to be rescued because it will having a lot of effect. State Bank was asked to take, and they were asked to put up so much money. And then they decided to put up. In the end, what happened? They found State Bank it will be 75%. They say no. It will then become a subsidy of State Bank. So then they work reverse. How much? 49%. How much money is needed? So 49%. Then they put it in rescued. That Mr. I think Prashant Kumar is there. He was also a member of our Indian Institute of Banking Finance because he was the DMD at that time. Somehow, some problems were definitely there, but what happened, all these even, see, for example, Global Trust Bank or this, see, all this bank doesn't have any legacy. They are hardly 20 years, 10 years. So you don't have the legacy, and all are having officers. Means young blood, technology driven. So that is an asset for any bank. Otherwise, most of our nationalized banks are 100 years. State Bank, you live apart, but others are 100 years old. So that legacy is a lot more there. So that legacy also proposed the problem. So this year, which was the bank third?
All those fintech companies.
No, fintech company, what happened, see, lot of pressures are there, okay, what they are saying. banks will not remain, physical banks will not remain, all sort of those is there. But how you are going to assess the risk, everyone machine is going to do, I think in India it is very difficult. Disbursement can be there. How can recovery? Machine can make the recovery. Who will make the recovery? How you will assess the risk? See, in those banks I was there, see after this new generation bank came, first was the GTP, then followed by HDFC. We never used to sell the loans or market the loans. This companies, this bank has brought this concept into the India. Make the people debt driven. Unless they have got the debt, they are not satisfied, or people will be happy if they have got the debt. This concept was never in India. But they brought it. We can't help it. So that is there. Then they say the savings and cost will be less and all that. Something many banks have also started for SME loans and all that. They have started it. It's not like that. So with the time you have to move on. I will not say, but you cannot make the recovery. Assessment you cannot make. Indian condition. See, we never used to go. See what we are having that from 2000. Any loan is there, any depositor is, people come to your home. We never are gone. What the customer says, it is his address. Fine. We never have visited any borrower or for that matter, any depositor. Today, can you open the account or anything? People come next day to your home. Because of this, so many you have driven the vehicle at a 200 kilometer speed where the speed allowed is only 80 kilometer. They bound to have lots of accident.
Hello, sir. So whenever we talk about financial crisis or a bank, we generally tend to have a traditional view of bank. But now we are moving to Web 3.0, or it is said that we are moving into Web 3.0. And in fact, in 2021 itself, about 80 billion worth dollar were lost in the financial crisis of decentralized finances. So isn't it the high time that central banks across the world should regulate the fund inflow and outflow into the DeFis?
No, what was the last sentence?
I said, isn't it the right time for central banks across the world to regulate the inflow and outflow of currency into DeFi?
No, I don't think. See, what happened that Basel is there, Bank of International Settlement, which is a informal things. Now 28 members are there with India's members. They always used to make recommendation to strengthen the finance system. Nobody used to pay the attention to them. After the fall of German bank in 79, everybody then became awake. After this 2007-8, now they are piously adopting this, although there is no compulsion. Okay? So central bank has the role to play. And you see, one of the books, that Neil Koenig book was there, I read in some 2002 or 4. He says, banking will not remain in 2020. Means this, whatever, motor bank and all that. Still it is there. Yes, you have got alternative options. But in India, whether it will remain not, I am very doubtful. Yes, option will be available. Other option will be available. See, let us take an example which is understood by it. In bank, we never thought we can give ATM cards to the pensioners. We thought that people will cheat them and all sorts of them, fool them and all that. One day, fine, around 2008-9, State Bank did that, given it. Every bank has given it. Something we never thought that it is possible. So these are what you are saying. It will come there. It is not there. We are trying to do. Central banks also are having to do it. But everything cannot be regulated, and they also cannot understand everything. It's not there. Because what we say in commercial bank, fraudsters are smart than the bankers. That's what fraud is. See, once upon a time, lots of fraud used to be in the drafts. All of a sudden, because you are internet banking, whatever you are having, all those things, you cannot, those area has gone. But as a branch manager of any branch, when I am sitting, I don't know. In the morning, I say it is a 120 crore deposit. In the evening, when I close, it is found 95 crore deposit. Where the 25 crore has gone, I am not able to see it because it is there. You are having connectivity every branch, whatever you are having size 2,000, 3,000, where the money has gone. Then I have to just go for the exceptional report, something about 10 lakhs where the money has gone. In our things, although mechanization was there, we were able to see the checks. where the money has gone. Here I am not able to see it. Only at the end of the day I will see what is the deposit. In the beginning I will say, so my tension will increase. But today it's fine. That is, we have to sometimes, it will increase also. I have not made any efforts. And from 95 crores it has become 120 crore. I am also happier. I have not gone anywhere. I have not contacted anyone. But my deposit has gone. That also can happen. So it is like that only. Anything? Otherwise I think, yes, okay.
Good morning, sir. My question is that considering the situation.
Now if she is laudable, let she speak loudly. Yes.
So considering the situation in the year 1930 and even for that matter in 2008, and also considering the various technologies that are emerging currently, how do we go about in preventing a financial crisis?
See, it is the human being that is responsible there. See, 1930, the psyche of the bank customers was different. Today it is different. The example I have given 67, that manager used to come out and announce everything. Bank is sound, everything is fine, don't worry, till you want to withdraw there. I had been to almost, I can say 8-9 places. I have traveled as a branch head, right from Ahmedabad to Delhi, like that. But in any branch, compared to the branch manager, customer know my sub-staff very well. It is not the manager who knows this. That has changed. People has got a faith in. But those days they were not having faith in the employer or anything, except who is the head. So it is the depositor who has changed. Technology and all that is fine. Your thing is there. See, something there is a run on bank, I don't bother to go. See, one of the something 6-8 months back, which is more than 100 years old, Goldsmith is there. He is collecting check. P.N. Garge and Company in Pune, where I stay. And there was some sort of a run. I told wife, don't worry. It is not going to happen. Let the people withdraw. Nothing has happened. After 2-3 days, it subsided. I said, how much you have invested? 50,000. Okay, leave it. So something you are prepared also. You are able to assess the risk also. No, nothing. You have to see. There is no need of a panic. See, today, in a bank when you are having a 5 lakh insurance, still somebody says you flock at Cooperative Bank. Why? Your deposit is only 2 lakhs. Why you are flocking at the bank? What for? Most of the today's depositors are itself very, you can say, educated. They keep the bank accounts in various banks. They don't keep all the eggs in one basket. You will not find in only one bank people are having account. Whose worry is there? Some deposit here because of interest, some deposit there because of safety. They also have their own ways of diversifying the risk. You cannot make that into the textbook, but they have got their own way.
Hello, sir. Sir, I am Laksh. My question is the nature of...
I think the last question, madam is saying time is running out. The last question. Okay.
So the nature of money is that the value decreases due to inflation and all, right? The current way of nature of money. So can a parallel system be developed by the government and RBI and all, where the value increases?
This is a purely academic question where your teacher can solve better than me. That's only I can tell you.
Okay.
Because it is not a practical thing, something, to be frank with you. It is only they can be able to solve it. As I told you, 67 1 rupee today by inflation, it is 5,000 rupees. That because I just take it, because when I give, because if I say it is a 2 lakh rupees, you will laugh at what is a 2 lakh rupees. Today it is valued 1 crore. So then you have got some of the old movie you see, na? If you have seen some 30 years back, something 50,000 rupees. So for that they have got a dacoity of 50,000 rupees. You will laugh at what is the dacoity for 50,000 rupees? So it is today something different. It is 5 crores, 10 crores, like that. So that conversion has to be there. But it is, to be frank with you, I am not discouraging you. It's a purely academic question where your teacher will be in a better position to resolve it. So I think, thank you very much. We'll wind up the time schedules, try to give it justice. Thank you very much.
So just a second. On behalf of the Somaya management and the audience, may I invite Dr. Mayuri Ergeri to please felicitate Sir.
Thanks. Respected dignitaries and my dear students, I, Dr. Aparna Jain, Assistant Director, SK Somaiya College, I'm glad to be standing here to express the vote of thanks. I would like to extend a special thanks to our Chief Speaker of the day, Dr. Sudhir M. Galande, for his very interesting, informative session. Sir, you have appraised us with your insights on the topic that is research on banks and financial crisis. Sir, you commenced with the 1907 of the case of J.B. Morgan, to the stock market crash, the failure of the banks of 1929, to the demonetization. So the story of Punjab National Bank and the Bank of Rajasthan was an eye-opener to all of us. I would also like to express our profound gratitude to our Vice Chancellor Pillai sir for his moral support and his constant source of motivation, the Dean Research for arranging such lectures. I think, sir, it's a very good initiative to start with these lectures because I truly believe that lifelong learning is more of a will rather than a skill. Sincere thanks to all the faculties who have put in a lot of efforts in making this a grand success. A special thanks to our technical support, our service providers, and our non-teaching staff. And last but not the least, the audience, my dear students, who have made it a grand success. Thank you, sir. Thank you very much.
Thank you, sir. Thank you, everyone. Students, if you have any questions, you can ask, sir. We'll switch off all the lights.